Yes guys, Jess here, back with another video. You read the title. We have massive manipulation in the market in my opinion. The US government has greenlighted a sale of $6.5 billion in seized Bitcoin. And as you can see, we've been grabbing all the downside liquidity since that 100k level that we lost just a few days ago. So we need to be talking about that exactly. We need to be going through all the different scenarios and the levels to be watching. So before we get into the analysis, let's try smash up this like button. Last video we got about 29 likes, so let's try get above 30 likes this video. That would be absolutely insane, guys. And with that being said, let's get straight away in towards this banger. Bow. So as you guys can see on this chart here, we have all the relevant levels and we have been exactly crashing from this level of resistance that we previously came to, where we had some key inflection points over there and a little bit of support over here. We exactly went to that level after we were calling for buys all the way down here, and then we had the brutal rejection. And if we were to just measure how far we actually came down from this resistance point, we came down about 11% or so when you take it from the top of the wick to the bottom of the wick. And as you can see in the short term, we are starting to form some sort of green candle, but again, things are not finished. We need to be looking at this is a massive trap, and we're just going to be continuing the dump all the way to the downside, shaking out even more long positions. So as you can see, all this downside liquidity has just been from longs, and they have been getting liquidated to the downside. But actually, the reason we actually came down in the first place was the US jobs openings data and the PMI index data. So as you can see, we had the JOLTS data coming in. We were expecting 7.73 million. However, it came in a bit hot and above the target, which just meant that there's more job openings, meaning that consumers in the US may have more disposable income to spend, which means higher inflation. And you can see the PMI data over there for the ISM index came in a bit hot, indicating the same thing. So for us to be bullish, we need to see symptoms of actually a weak economy, which indicates that we need more rate cuts, which makes risk assets like Bitcoin actually pump. However, we saw the inverse of that, so that was very bearish. So you can see over here on the daily time frame for crypto and for stocks, we actually had a risk asset pullback ever since the 7th of January. So that daily candle was really red, and that was a bearish engulfing candle for the S&P just here on the right hand side, the Nasdaq as well just below it, and on the left hand side we had Bitcoin having that bearish engulfing candle, and we're about to potentially confirm a 3 back crows candle formation, which is quite bearish. So we need to be indicating if this is a massive trap or we're going to be seeing some further downside in the short term. And also we had Ethereum actually crashing to the downside too. So to determine whether we might get continuation, we need to see if the stock market is going to continue dumping tomorrow, as today the market was actually closed due to the National Day mourning of Jimmy Carter. But as you can see, sentiment is typically very fearful in the stock market right now, which is kind of having an effect on crypto as we're actually pulling back with the stock market. And you can see by this tweet over here, Joe Consorti actually points out that the stock market has been performing really badly. The S&P equity risk premium has actually flipped negative for the first time in 23 years. So the last time I was actually negative was in and around 2004. And all this means is that the S&P has actually been performing a lot worse than normal. It's actually been performing worse than treasuries, which just means bonds in the US. So the measurement for that is the forward earnings in the S&P are lower than the forward earnings in the 10-year treasury market, which just makes the risk to reward profile actually worse. And there's more incentive to actually own treasuries. So you can see there's a lot of bearish news for risk assets. So as you can see in the short term, it's actually came to light that the US government has actually greenlighted a $6.5 billion sale on Bitcoin. However, this is not confirmed yet to actually happen, as it's just a green light for this to actually take place in court. So we actually need to be monitoring this situation more closely over the next coming weeks to actually see if they can actually sell. But essentially, it's just games being played by the Democrats to try and dump as much Bitcoin as they can before Trump comes in office. As we know, Trump's actually promised to move this Bitcoin into the US Treasury, where they will never sell it and actually hold it long term to actually solve the debt issue in the US. So the Democrats are actually playing some games to actually try and sell this Bitcoin before Trump comes in office. But definitely do not be fooled, as if this does not actually go through and they can't actually sell this Bitcoin, this will be forgotten about. And you can see the Silk Road wallet can actually be tracked, as it's held on the blockchain. Of course, everything in crypto can actually be tracked on the blockchain, and you can see that the amount is still there. They're still holding it in the wallet, so there's nothing really to be worried about in the longer time frame if you have a longer time horizon, like 5 or 10 years or so, because this is just a bump in the road. And if they even manage to somehow sell this, then you should operate under the lens of having more time to accumulate BTC under 100k, in my opinion. Delving deeper to Bitcoin in the imminent short term, you can see that we're exactly bouncing a little bit in the short term on that range low level that I was talking about near the previous week's mid-range. We actually came in towards a yearly open and we saw some demand. However, it wasn't enough to actually bring price all the way up to our range highs, and we immediately just came down some more. And right now we're actually selling off even more, so things are not looking really good. It looks like it's likely that we can actually come and fill this liquidity wick in and around the 90k region there. So I have that psychological level dotted and marked out. So if we do actually keep on rejecting and reaching that level, I actually expect a big bounce in towards the range again. And on the reclaim, you could potentially look at establishing longs if things are looking strong, where you could actually catch that W formation and actually look for price to move higher. But you can see it's imperative that we see some bullish demand actually step in the market right now, as we're hovering around this level for quite some time. So if we spend even more time here, it's likely that we're actually going to come in towards this level where I've marked out on the previous chart there. And if we still can't even have some demand, we may actually sweep all the downside liquidity before actually seeing any possibilities of us actually spiking upwards. So you can see we've been range bound for about 59 days over here. So this is the slow choppy phase historically that we've always seen before that massive move up. And as you can see by the Bitcoin funding rates on a 30-day time frame, as it's helped to reset the market. So if you zoom out on a 3-month time frame for the funding rate heat map, you can see that things were getting a bit overheated in towards the start of December, and we had a quick flush out and we remained range bound to actually reset things, which is very bullish and actually healthy for the market in towards the next leg upwards. So looking deeper into the funding rates, you can see that the funding rates are even negative right now on some exchanges like OKF over there for Bitcoin. This means that market participants are taking more short positions than long positions, and statistics point toward retail market participants being more wrong than right over a long enough time frame. So this can be a signal indicating that in the medium term, whether we come down lower or not, we're gonna trend higher and resume the bull market. Now, one thing that was actually concerning that I posted about on Twitter was our daily exchange volume was very low. And when volumes are low, it's easier to actually move price and manipulate things. And as you can see, since the funding rates actually got reset, the daily exchange volume has just been moving further and further down. So we actually expected this to actually tick up massively in towards the start of this year, as market participants are entering the market again after the Christmas season, and funds and institutions should be operating again, bringing this volume upwards. However, it still remained relatively low. It can be a reason why we're seeing this massive sell-off. So actually, it's quite typical to see this actually come down during the Christmas season, but it's imperative that it actually starts ticking up massively. And you can see if we zoom in, it's actually starting to tick up a little bit. So we want to see this actually surpass the high of around 100 billion to actually confirm that things are not as concerning, and hopefully that coincides with some sort of bounce. So if you're enjoying the video and you want to be trading yourself, make sure to be checking that first link down below. If you check that first link down below, this will take you to this page over here, which is the sign up page for Blofin. Blofin are one of the best exchanges out there, guys. They are one of the lowest fees. They have fire blocks, which just means that they have a third-party custodian so that your funds are more secure. So definitely be checking if this is available in your country, as I definitely recommend Blofin. These guys are really good guys, and if you agree with their analysis and you agree with my opinion, then definitely looking towards signing up to Blofin so that you can take advantage of this opportunity. And for some reason, if you don't want to use Blofin, then we got KCEX over here, so make sure to be clicking there. You can gain up to $9,000 in deposit bonuses as well. You get 0 maker fees, and you got no fees on spot as well, and you have that 0 withdrawal fee 2 on all change, which is absolutely amazing. So if you're enjoying my analysis and you're liking my opinion and you want to be taking advantage of some of the information, then make sure to be checking if it's available in your country. And if it's available in your country, you can click that second link down below for KCEX. So you can see, even if we lose the support, 89.6k is the next level to watch, which is the mid-range, taking the range low from our start of this range, where we actually slowed down momentum after that parabolic run. And then we using this range low that we're holding right now, and the 50% level is at 89.6k, and that would actually be in and around the 90k psychological level, where we can see some demand actually step in. So this is a consolidation pattern that we can actually look in towards for Bitcoin, and if we actually get some demand kick in, we can actually rally in towards our window for the inauguration that I've talked about in previous videos. So if you want more on that, then watch my previous videos. But you can see if we actually lose the support over here, then we can definitely look in towards the 382.5 level that I've been talking about, where the probability of us actually reaching a level is still there. And you can see that actually, if we look at the RSI, we had bearish divergence all the way from the 17th of December, which I was talking about a lot of the time. And I did point out this scenario where we can come to the 382 on 0.5, which lines up perfectly with our 21-week exponential moving average. And if you look closely, we have this presence of a head and shoulders pattern, just like this. If you look at the left shoulder, you have the heading towards the highs of 108k, and then you look at this right shoulder that just formed, we're hovering just below the breakout level where it actually gets activated in and around the 90k region over there. So if we actually have a daily candle close specifically below 91.5k, then you can expect us to actually move in towards this target. And the technical target for the head and shoulders is taking it from the top of the head to the neckline over there, and you take it to the anticipated breakout, and actually lines up perfectly with the 0.5 level and the CME gap in and around the 78 to 77k price level. So you can see our CME gap is in and around the 81k mark, and if we fully fill it, we'll get to that 77.3k level. Or if we get to that level, we definitely want to see bull step in, as that should actually confirm a higher low in the longer time frame. And if we actually lose that and start coming in towards our previous resistance point in the 70k range, then it's likely that something's may be wrong in the market and we can get a bounce. But if it isn't strong enough, again, that can be a lower high, and then we can see something like this happen where we get a lower high instead of a higher high over there, and we actually finish the bull market. But I do think that is really, really low probability. I do think that if we do come in towards this exponential moving average, it would elicit a bounce, and the moving average will start straightening out as we actually tackle the all-time highs over there. But if that was to play out, I would expect the fear and greed to actually be reset, which can be quite bullish, as historically when we were in extreme fear or even fear, it actually presented the best buying opportunities. So you can see we've been talking about this every video, and we'll be saying that it's likely that we're putting in a macro higher low over here, and history is actually exactly repeating from this 2020 fractal on the left hand side over there. And we have our cup and handle measure move from our base to our neckline over there, and that coincides with the 120k level. And the 120k level actually is the projected range highs I've used for this fractal over here, where I'm looking at horizontal levels that can potentially provide support, and we're currently tackling our range quarter. So if we get another wick on the weekly time frame, that would just indicate that this is just a consolidation where we're just shaking out the weak hands before resuming the up only environment again, where we can actually tackle new all-time highs. So that'll be it for me, guys. Make sure to be following me on Twitter to stay up to date with different market developments. You can see I made a few tweets today about altcoins, and I'll cover them in more detail, specifically Ethereum as well, from next video onwards. But yeah, hopefully you guys are up to date now, and be following me on Twitter to be getting all the charts I include in the videos. And yeah, have a blessed rest of your day. Peace, guys. See ya. Bye bye.